going to give you an understanding of how we plan on using a loan from our cash value life insurance policy to finance our camera gear. So in today's video, you're going to see exactly how we finance our camera equipment for our YouTube channel. My name is Darius.
And I'm Carmen.
For the best infinite banking and financial advice, subscribe to our channel and hit the notification bell to be notified when we post new videos.
If you are new to our channel, then welcome. Like Darius said, we are going to show you our self-financing strategy to upgrade our camera equipment. Because for the past year, we have been using my iPhone 8 Plus for filming. It's done a great job up until now, but it is time to upgrade. So here is how we plan on doing this. Darius and I have several whole life insurance policies, so we are going to request a loan for $1,745 to finance our camera equipment. And this will buy us a brand new camera with 2 lenses, 2 different tripods for one stationary and one on the go, extra batteries, and a memory card. Now remember, we are not using any bank financing to make this happen. We are strictly getting a loan from our life insurance policy in the amount of $1,745.
Now you may be asking yourself, Carmen and Darius, why use a whole life insurance policy, right? Well, it's because we're our own source of financing, and we would rather pay ourselves the interest rather than paying it to the bank. So we do this with every single thing. You may have noticed one of the videos that we've done in the past, and we'll link it up here, is how we earn 36% interest by paying our rent. Now, you can do this with the new iPhones coming out. You can do this with camera equipment. You can do this with your rent. Anytime you spend cash is an opportunity for you to make money.
And so to that point, what we're going to do is flip to our screen and show you 3 different options in which we are planning to pay ourselves back. Now keep in mind, we are paying ourselves on the higher end of interest. And the reason being is because we are comparing our interest rates to a high interest rate of a credit card. And the reason being is because if the banks are going to pay high interest rates for credit cards, we're just going to charge ourselves the exact same way because we want to keep as much of our money as we possibly can.
Now here's the kicker, Wealth Nation. We're not going to spend a dime on this transaction. We're just going to play the middleman. We're going to borrow the money from our whole life insurance policy, and then we're going to have YouTube pay it back. Because we have a YouTube channel, we get paid for ads that run on our channel. So we're going to take those funds, and instead of putting it into our expense account, we're just going to use those funds to pay for our camera.
Genius! I have to say, this was my idea. I dreamt it and I was like, Darius, we're not coming out of our pocket for our camera equipment because YouTube's gonna pay it all back. So to break this down just a little bit to make sure we didn't lose you, right? So you all know how it goes. We always talk about infinite banking, which is the process of using the loans from your whole life insurance policies to finance your lifestyle. So in this instance, all we're doing is getting a loan, buying all of our camera equipment, and in traditional sense, you would be using your income to pay back the loan or any passive income that you have. In our instance, we're using the income that we receive from YouTube. So with our account, we get paid on a monthly basis from YouTube because they put ads on our videos. So instead of us having to come out of pocket from our checkings account, we're literally just moving money around. So we're moving around the income that we make from YouTube, and it's going to go straight into our life insurance policies.
Now, it's more than right for us to do this because the camera is for YouTube.
Exactly.
So why not YouTube pay for it?
It's reinvesting in our business.
There you go. So here's a visual breakdown of how we're going to finance our camera gear. Our camera gear costs $1,745. We have to borrow the money from our whole life insurance policy. Those funds go into an account which we call our separate checking account or a segregated account, and then we use those funds to then purchase our camera gear. Now, the reason why we have a segregated account is because we cannot pay for anything directly out of our whole life insurance policy. So we run everything that comes from our policy through a separate checking account that's separate from every single thing that we do for tax purposes. So the very first thing we do is we borrow the funds from our policy. Those funds go into our separate checking account. Now, this is how we research exactly the cost or the interest rate in which we will be charging ourselves. The average credit card APR by US News. So we see that the minimum APR for a business credit card is 15.86%. And the average maximum APR is 23.5%. This is the average that consumers are paying now for business credit cards. So we use these numbers for self-financing our equipment. So we take the $1,745 plus the 23.5% interest, we purchase the camera gear. Now on a monthly basis from Google AdSense, we're going to be paying ourselves back monthly $165. On a monthly basis, these funds go into our separate checking account, which again is separate from all our other personal and business expenses. After a year, we have $1,975 inside the segregated account. Now, this includes the 23.5% interest that we decided to pay ourselves based on the research that we've done. So initially, we borrowed $1,745 from our whole life insurance policy. What we have to understand is every time we get a loan, we are charged interest by the insurance company. That interest rate is simple interest of 5% charged annually. So for getting this loan, we'll pay $87.25. This leaves us with $142.71 to go towards additional paid up insurance. Additional PUA is the cash value available inside of our whole life insurance policy. And the reason why we're using the funds from our whole life insurance policy is because even though we borrowed $1,745, we still continue to earn compounding as if those funds were still there. So not only are we recapturing the interest of 23.5%, but we're still continuing to earn additional compounding inside of the policy. So just to go back how we came up with the numbers, this is a business expense for us. So we want to charge ourselves accordingly as if we used a business credit card at 23.5%. And we have a range from 15.86%, which is the minimum, to a maximum APR 23.5%. Here's three options in which we would have charged ourselves. We could have charged ourselves a minimum of the 15.86%, which is $158.21. After 12 months of paying ourselves, that's $1,898.52, which means after paying the 5% additional interest of $87.25, we can contribute additional $65.82 towards our additional paid up addition rider. As we move down to 20% interest, which is the average of the two, is 20%, we would have been able to put an additional $107.30 into our paid up addition. But as you know, we decided to go with the higher amount of 23.5%. So the exact numbers for the 23.5% is $164.58. We just decided to make it an even number of $165 that YouTube is going to pay for us. Now, the reason why we didn't pay cash for this is because, again, this is a business expense and we don't have enough money from Google AdSense to make the purchase to pay for our camera gear outright. So we financed it. Let's do a recap on how we're recapturing our funds back to ourselves. The cost of our camera equipment is $1,745. We borrow $1,745 from the whole life insurance company. And then we have Google AdSense repay the money that we borrowed from the insurance company at 23%. The additional interest goes back into our insurance policy and not only increases our death benefit, it also increases our cash value so that when we want to replace our camera equipment or finance something else through our business, we have more money to borrow.
And that's all it is. So it's important for us to share this information with you because a lot of people sometimes overcomplicate this process and think that they have to come out of thousands of dollars in order to see any real gains within their banking system. And that's just not the case. You really need to zero in and figure out how much money are you spending on a monthly basis and how can you rearrange your finances to become your own source of financing. So instead of that money leaving your household every single month, you're finding ways to bring it back to you. So in this case, Darius and I scrutinized the fact that we have an expense of $1,700 coming up and we want to keep that money. So we just had to go to the drawing board and figure out how we were going to create a creative financing strategy to allow us to spend that money but get it all back and not come out of pocket to do so.
Now, with all that said, just remember, infinite banking is a process. It's a process of moving money and making money. And that's all we did in this situation. We just followed the process and the system that we created for ourselves.
So if you'd like to move money like Darius and I and be as creative as you possibly can with your finances, then click on the link below to become our client. And if you like this video, give us a thumbs up, share, and subscribe.
And remember, own your own lifestyle.
Or someone else will.